Hello everyone, welcome to Concept. My name is Dharmendra. Today we are going to talk about discipline in stock market. Okay, it will help you a lot in your trading journey, in your investment journey. So please listen it carefully. Okay, don't skip this video. It will help you a lot. All right. So we're going to talk about discipline, and I am going to tell you how you can follow these rules and regulation because it is just exactly the same which we are following for schools, colleges, and in our corporate life, in our professional life. Okay, it is exactly the same, but you need to keep some factors in your mind before following it. Okay, so let's start with discipline. All right, so here I have given the heading discipline. Okay, so what is discipline? It is basically the laid down rules and regulation which we need to follow. All right, which we need to follow. Now, are these rules and regulations laid down by some institutions, some you can say some authorities? No, it is not. Okay, it is laid down by some professionals who knows that if you follow this rule, we will be. I'm not saying that we will be more profitable, but in this way we are going to protect our capital. Okay, we will gain profit slowly, okay, not in bigger manner, but if we are going to follow this discipline, we'll be less likely to be to fail in this strategy. All right, so now whenever it comes to discipline, okay, let's just say you are going to do the investment or trading. In both you need to follow the discipline. All right, so let's start with investment. Okay, so whenever you are going to do the investment, first you need to study. Okay, you need to study. You don't follow the tips. Okay, you need to study. Even if someone giving you the tips that this stock might go up, this stock might go down, it is your duty to study that news, to cross check that news, to authenticate. Okay, do the authentication test whether that news is correct or not. All right, you need to study on your own will. Okay, so that you will not fall into the trap. All right, so study is the most important factor whenever you are going to do the investment. All right, now second is capital protection. Capital protection. Now why I am saying this capital protection? All right, let's just say you have like 5 lakh rupees. Okay, let's just say you have 5 lakh rupees. All right, or maybe you can say you have 50 lakh rupees. Okay, what are the amount you are investing? All right, you have 50 lakh rupees, you have 5 lakh rupees. So this amount you are going to invest in the stock market to buy some securities, whether in commodities or whether in stock. Okay, so are you going to invest a whole amount into one security? Not at all. You need to diversify it. Okay, you need to diversify it. So you need to diversify it in some specific category of stocks. Okay, let's just say I'm going to buy the growth stock, I'm going to buy the dividend stock, I'm going to buy the defensive stocks. Okay, let's just say FMCG sectors and all right, even in commodities I'm going to buy the gold and silver. So this is how you are going to diversify it. Okay, this is very crucial step while investing. Okay, next I am going to invest only 60 to 70% of the amount. Okay, max to max 70% of the amount. Okay, so if it is like out of 5 lakh I am going to invest only 3 lakh 50,000, out of 50 lakh I am going to invest only 35 lakh. Okay, why I am saying this? Because if you are investing 35 lakh rupees, okay, let's just say tomorrow some news come. Okay, any international news. Okay, now the market, the market crashes down. Most of the time it crashes down because of panic selling. Okay, there is nothing wrong with the stock. There is nothing wrong with the stock. Okay, most of the time it happens due to panic selling. Okay, so when that happens, okay, the price retraces back to its original value at the price you have bought it, or maybe below that. Okay, so when it happen, you can average it out. Okay, from the rest of the amount, you can average it out so that the buying price will go further below. Okay, in this way you are going to utilize your capital to average the price. Okay, so in future when it goes again up, you will be profitable. Okay, that is how you are going to invest your amount. All right, but before that, study, thorough study. Okay, because you are investing your hard-earned money, so thorough study is very much important. All right, most of the like Nifty 50 stocks and all, you have to study, because you can see sometimes due to certain factors the stock goes down. If you don't do the study, we will lose all our amount. I am not going to name some stocks, but you can see they have been delisted. Okay, they have been delisted. Many of the investors have lost their amount. So you need to study thoroughly. All right, this is for investment. All right, so now this is for investment. Let's just say you have huge amount. All right, so always with your broker, or maybe any place you have invested the amount. Okay, you need to hedge it every time. Now, how to do the hedging? Option strategies. Option strategies. So you need to do the hedging, because in hedging what happens, if your portfolio, if the value of your portfolio decreases by 10%, you will gain that amount through the hedging. Okay, so but that depends on all the other calculation like beta factors and all. Okay, on the basis of that you need to hedge, whether you are going to hedge through the indices or the stocks. Okay, so the beta factor calculation is important, because of that you are going to calculate how much lot you need to buy or sell. All right, so hedging is important to protect your portfolio. Okay, so this is the discipline you need to follow: study, capital protection, hedging. All right, all three steps you need to follow. Okay, I am going to write it over here: hedging. All right, because of hedging you will be, most of the time will be able to protect your capital. All right, so this is about investment. All right, this is about investment. Now let's go to the trading. Okay, now in investment I am not going to say it is easy, but it is less stressful as compared to trading. Okay, less stressful as compared to trading. So in trading, what is the most important thing? What is the most important thing which we need to follow, which we need to develop, is this strategy. Is the strategy. Now strategy can be on two types. Okay, on two types. So let's just say, okay, on two types. First one is based on underlying asset. All right, underlying asset means I am going to analyze the stock or indices on the basis of chart patterns, candlestick pattern, or indicators, whatever I am going to use it. Okay, so I am going to first develop a strategy on the basis of underlying asset. Okay, so I am going to study the chart pattern, I am going to study the candlestick pattern, price action, whatever it takes, I need to study it. Okay, I need to back test it. Most important is I need to back test it. All right, I need to back test it to see how many times I was profitable and how many times I was at loss. Okay, and when the net profit comes like in the month, okay, like 3, 5, 10, 15, 20%. Okay, now in the beginning you should not go for 20%. All right, you should aim for 3 to 5%. Okay, because 3 to 5% is more than what the market is giving you. All right, the market is giving you yearly like 12, 13, 15%. If you are going for 3 to 5%, that means you are going to earn more than like in between 36 to 60% yearly. All right, so in the beginning you need to follow this. All right, that how much profit I am going to get it. Okay, so first one is underlying asset, second one is option strategy. Okay, there are various option strategy: bull call spread, bull put spread for bullish, bear call spread, bear put spread. Okay, condor strategy, butterfly strategy. So you need to learn all these. Okay, why I'm saying this, you need to learn option strategy, because if you are going to trade in derivative market, you have to be master at option strategies, okay, because it will define your profit and as well as loss also, okay. So it will give you clear picture, it will give you clear picture that how much losses and how much profit you are going to make in a month or in a year. All right, so option strategy is important. So first one is strategy building. All right, you need to do the strategy. All right, now first one is like stop, okay, I'm sorry. Risk management, okay. Do not deploy all your amount in one strategy, do not deploy all your amount in one trade, okay. Let's just say you have capital of 2 lakh rupees, you are not going to invest all 2 lakh rupees in the trading, okay. Just like follow the rule of like 25%, okay. Like if you have 2 lakh rupees, go with the 50,000 rupees, and in that also you should not keep your stop loss like more than 2-3%, okay. According to that you need to follow. So here risk management is important. Always follow the risk management, that how much loss you can take. Don't go further than that, okay. Let's just say I have 50,000, all right. Out of 2 lakh, I am investing 50,000, and I am keeping my, you can say I am keeping my loss, loss capacity at 2,500 or maybe 5,000. All right, 5,000, let's just say 10%, okay, it is huge. So if I'm going to lose 5,000 rupees, okay, so if market goes down, if my strategy doesn't work, okay, if it is giving me like 7 to 8,000, no, I cannot go that, okay. I strictly need to keep my stop loss at 5,000 only, so that I will not lose more than 5,000. Some people, they just keep hope, okay, it will go up again, okay, it will go up again. Whenever they buy some stock or whenever they buy an option, okay, now I am getting 10,000 losses, 15,000 losses, okay. Now, no, I will average it out, okay, again it will go up. They just keep buying, keep averaging out in a hope that it will go up, when they know that there is a possibility that it go further down. All right, so believe in your strategy first, develop your strategy, strictly follow that where I'm going to keep my stop loss, okay, and you need to stick to that stop loss. You cannot go further away from that. All right, so risk management is really important because it will help you to save your capital. If you don't follow this, your capital will be wiped out, okay. So risk management, okay. Now third one is risk reward, okay. Why risk reward? Because if you are not earning like more than 1:1.5, you will be not in profitable, okay. So let me give you an example. Let's just say I am keeping my ratio at 1:1, okay. So out of 20 days trading, okay, we know that market doesn't move same way like every time, okay. It give you levels at every day. All right, it is dynamic in nature. All right, so let's just say out of 20 days, I am profitable, let's just say 10 days, okay, because you need to keep in mind there will be worst possibilities also, okay, worst possibilities also. So if I'm profitable on 10 days and loss at 10 days, so if I'm keeping my stop loss 500 and target also 500, so you can say I am making 5,000, I am losing 5,000, so I'll be at 0, okay. So when I'm going to increase it, okay, let's just say my strike ratio is 70%, okay. So if I'm going to do 14 days profit and only 6 days losses, okay. So out of 14 days profit, how much I'm going to gain? Here I will gain 6,000, I'm sorry, 7,000 if I'm going to earn 500 every day. So 7,000, now here I'm going to lose 3,000, right? Now I'll be profitable, okay. So but is this amount is enough, like 7,000, okay, 4,000? I'm going to say no, okay. Why I'm going to say no? Because some other factors also considers, like your brokerage or at AMC and all, okay. So it will reduce it further, okay. Now if I'm going to do 1:1.5, okay, if I'm going to do 1:1.5, what will happen, okay. what will happen, even if in 10 days, let's just say here I'm losing 500, here sorry, this is for profit, okay. So here I'm losing 500 every day, that means 5,000, all right. Now here I am earning 750 rupees every day, that means 7,500. So in this case, I'll be profitable 2,500 rupees more. And if I go further on the upside, okay, 70% strike ratio, I'll be more profitable. Same goes to 1:2. If I'm going to go for 1:2, that means I'm keeping my stop loss at 500 and gaining 1,000 rupees. So here I will earn 10,000. Here I will lose 5,000. Okay. Similarly, if it goes to 70% strike ratio, 14,000 is earning and 6,000 is losing. So I am here, I am going to earn like 8,000 rupees. So in this way, you are going to scale it up. Okay, I am going to scale it up. All right. So here, if I am going to earn this amount in one lot, okay. Now, if I am going to increase it 2 lot, 3 lot, okay, let's just say 10 lot, okay, 10 lot. So from 8,000 earning, I'll go to 80,000 earning. That is how you are going to scale it up. There is no shortcut. There is no lottery system. There is no shortcut. Okay. So this is how you are going to scale it up. Now, this is the risk reward I'm going to I was talking about. Okay. So you need to follow that. Okay. Now, don't fall into the trap that I'm going to earn like 10-20% a day. Okay. Because there is a possibility that you might lose 10-20% in a day also. Okay. So you need to keep your discipline in tight. All right. Always follow the rules. Okay. Build up your strategy, underlying or option strategy, do the back testing, see how many times you are profitable, choose the strike ratio. Okay. Whether you are 60% or 70% of the time you are profitable, then only you go with that particular strategy. All right. So if the strike ratio is 70%, then do the risk management. All right. It is important. Then go with the risk reward ratio. Okay. That all comes under discipline. That is how you are going to be a profitable trader while trading or investing. Okay. So this is all about discipline. All right. This is all about discipline. This is all about discipline in the stock market. If you like this video, please like and share. If you have any doubts regarding the concept tool, you can call on that number. The advisor will help you out. This is Dharmendra Rajbhar. Thank you very much.